Can you hear us okay, Ben?
Perfect. I can hear you just fine.
All right. Look at Ben's office. What an amazing office. At the corner window, right by the bay. Right there. The only problem is it gets windy up there sometimes.
That's true.
His headphones blow off, but it's all right. We have just a few people here today that we're going to be doing the class for, but you have the PowerPoint. So what I was going to do is do a brief description of the class and who you are and how you plan, and then let you do the PowerPoint. And at the end of the PowerPoint, we'll go over those other things I sent you. Is that okay?
That sounds good.
Perfect. Okay, so
this.
this.
We take one of these?
Yeah, those packets are for you guys. Do you guys have the packets?
No.
Let's make sure they get the packet.
I didn't even know. You just gave it to me. I had no idea.
I mean, if being a teacher taught me anything, it was how to pass things out. Or ask people to.
True.
I think because where I taught, they throw them at each other. Oh my gosh.
So today what we're talking about is, I talked about this morning at the meeting, Gary Keller wrote the book, The Millionaire Real Estate. A lot of it has to do with you purchasing real estate, right?
I downloaded it. I haven't quite read it yet.
So this is going to be for you to purchase real estate, but also to help your customers purchase real estate. Okay.
Awesome.
This real estate is not to live in. This is not from your primary residence. This is for investment purposes only. And there's restrictions on how you can use it for yourself, which I've talked to Ben about because I bought a vacation home with one of these, like Airbnb, right? How much can I use it? Also, too, this would be just for terms of clarity, because Ben, this question always comes up, and I just went over this one. It's not for an IRA that you have when you're currently working at a company, but realtors have SEP IRAs, Ben. Those qualify, correct?
You bet. Yep.
Okay, good. What are the kind of IRAs qualify?
So when you're talking about retirement account, there are several different types of retirement accounts. The most common from an IRA standpoint are what's called traditional and Roth. Traditional and a Roth are like an individual retirement account. They're not linked to a business. But what you're talking about with a SEP IRA, the easiest way to describe a SEP IRA is like a 401k, but it's in an IRA form. So with the SEP IRA, the business that you have sponsors the SEP IRA. And the advantages of a SEP IRA is you can contribute more to a SEP IRA than you can to a traditional or a Roth IRA. So that's the main difference. As you mentioned, if you're working for a company and you've got a 401k with that company, a lot of times the company restricts what you can do with that. They don't let you buy real estate or other hard assets. They only let you do stocks and bonds, mutual funds. And that's why, as you mentioned, you have some restrictions when you're working for a company because they are restricting what you can do. But obviously, if you've left a company, you're no longer with the company, you could roll your 401k into an IRA account and invest through the IRA with us.
How much can you put in a regular 401k? Say, like, for instance, I had one with a company. Now I've got a self-directed IRA with you guys. I have the money with you guys. And let's say I want to add money to it. How much can I add per year?
Yep. So if you do a traditional or a Roth, it's $6,000 a year. If you had a SEP IRA or if you had a 401k account, you can actually do upwards of, I think, $59,000. It's a pretty large amount. Now, the $59,000 is going to be based on how well you do with your company. So let's just say that you're a realtor and you have your own real estate license and you have your own business and you do really well this year and you sell $300,000 worth of real estate this year. You could put upwards of probably $59,000 into a 401k account this year if you chose to. But if you only made $50,000 this year in your real estate business, you couldn't put the full amount there. There are some restrictions on how much you can contribute based on how much you made that year.
And can that be also done either Roth or pre-tax too?
Correct. Yeah. So what we do, there's a couple things we do. We do self-directed IRAs. So that's traditional, Roth, and SEP. We also do what's called a self-directed 401k. A self-directed 401k would be, let's say you have your own individual company and you want to set up a 401k for that company. We can set up a 401k specific for that company. And when you're contributing to a 401k, there's two components. There's the employee's portion and then the employer matching. As an employee, you can contribute, I think it's $18,500. I think that's the amount this year. That portion can be Roth. So your employee portion of $18,500 is Roth. The remaining amount, which is $35,000, $36,000, that's got to be traditional, meaning it's pre-tax. And if you want me to explain the difference between Roth versus traditional, I can explain that too. But
okay, we'll get to that a little bit later. So we want to make sure that you guys understand it's not for people to live in homes. It's for you to purchase real estate. So if you're a realtor and you want to do diverse in taxes, you can do some pre-tax, not pay tax on it, buy property with it instead of Roth. And then you can run that lease that property out, vacation rental, whatever. For your customers, you probably have customers that refer to you probably in the past. You've sold homes, you know they work somewhere, maybe they don't work there anymore. Hey, if you got a 401k, maybe you can buy some real estate. Let's talk about it. So what I'm going to do now is I'm going to let Ben go ahead and go through the PowerPoint with you guys so you can understand everything about how it works. Now, to give you an idea, in 2009, my company was purchased from another company. So I rolled all the money out that I had, which is about $300,000, which doesn't sound like a lot for buying real estate. But at the time, the market was pretty low, right? So what I did is I ended up buying one property in Los Angeles and one property in Idaho. And it took me 2 years to get the information he's going to give you right now in 30 minutes because nobody would answer my questions. There's a lot of other companies out there as well besides AccuPlan. And because we're talking about AccuPlan today, doesn't mean you need to use them. I use them because they answer my questions so that I can make an informed decision when purchasing real estate. That's why I work with them. There's other companies out there as well. So
it's all my 401ks are in the market. Nothing is out of the market. So this is interesting.
Right. So
that's smart.
Right. So so for me, it worked really, really well. I purchased a couple of properties and they're cash flowing great. We'll go through that at the end, but I'm going to let Ben go ahead and go through the PowerPoint with you guys. Okay.
Perfect. Now, do you want me to show the PowerPoint on my screen so you guys can see it?
We'd like that. Yes.
Okay. I wanted to.
Yeah, we do, because there's people out that don't have handouts with them.
That's fine.
That are online.
Perfect. I just wanted to make sure that you can see. Let me get here and let me slide over. Can you see my?
See it. Yeah, we're good.
Perfect. Let me just get into the actual slideshow here. Oh, sorry. Where is it?
You can admit that.
There it is. It's usually at the bottom. Okay. Can you see my screen all right?
Yeah. Can you admit the person at the top of your screen? Do you see him?
Yeah. So you don't see me. Let me move me out of the way. Is that better?
Yeah. But can you see the person at the top of your screen that says admit?
Let me see. Let me.
You have to move your screen around a little bit.
Hold on 1 second. Admit.
I almost want to grab the little thing and just stick it on.
Yeah, the mouse is right
there. Can I do it with this?
Yeah, you can do it.
I think so. Yeah.
Just move it up to the admit, and then you'll be able to.
Okay, good. I didn't know my mouse was going to work when you had control. So.
Okay, does that work? We good?
Yep, we're good.
Okay.
I'll be in charge of that.
All right. I can't see your faces very much anymore, or your hands raised. So if you have questions, just yell out. Say, I have a question or comment as we go along. But let me kind of briefly explain who I am and who we are as a company. So I work for a company called AccuPlan Benefit Services, and we are a company that allows you to self-direct your retirement account. As was mentioned before, there are multiple companies that do this, but it's not discussed very often. Most people that you talk to, you'll never know that you can invest in real estate with your IRA. And one of the reasons why you'll never know that is because your financial advisor only makes money when your money's in the market. If your money's out of the market, they're not making any money on you. So if you were to call your financial advisor and say, I want to buy real estate, they're going to probably say, one, you can't do it. Or they're going to say, we don't do it and we don't recommend that you do it. So that's why, you need to kind of find someone that will do this kind of investing with us. All right, let me, just a disclaimer, obviously I have to say this. I am not a financial advisor. I'm not a CPA. I'm not your attorney. So all of this information is going to be for educational purposes only. I've been doing this for almost 20 years. So I can tell you, I know probably almost every question that you'll have, and I'll answer any question that you have, but I always tell people, make sure you go to your own CPA, your own financial advisor, because I don't want to say something that maybe the law's changed that I'm not aware of. AccuPlan Benefit Services, we're one of the premier people we do both 401k and self-directed IRA administration. As it states before, we provide self-directed IRAs, 401ks, products to individuals looking to invest their retirement account. We've been in business since as long as I've been in here, since 1995. But we've had AccuPlan around for the past, since 2007 is how long AccuPlan's been around. We are not a law firm, but we do have attorneys and financial advisors and CPAs on staff, but we are not technically a law firm. A little bit more about us and American Estate and Trust. There's two companies that you'll probably hear today. The first company you're going to hear about is AccuPlan. AccuPlan is not an IRA custodian. We are more like a facilitator. We are like your financial advisor. We help you set up the accounts. We help you fund the accounts. We help you move money around. Your actual money is held with our sister company called American Estate and Trust. Stands for AET. AET is a licensed and regulated trust company. The main difference between, say, a bank and American Estate and Trust is we are licensed as a trust company. We're not licensed as a bank, which means we have to use a bank for all of our money. And so right now, we currently store all of our money with Wells Fargo. The money is FDIC insured. AET is licensed and bonded and regulated with the state of Nevada. And as a trust company, 100% of the money is available. So what that means is, if you're familiar with banks, if I give my bank $100, my bank does not need to hold that $100. They can go out and they can loan a lot of that money out. With us and the way that we work, if you gave us $100, we keep $100 in the account. It does not get loaned out. It does not get transferred to anyone else. So there's a lot more security with that than there would be with a bank. And AET is regulated by the same laws and banks and that banks and financial advisors have. Are there any questions before I go on further? All right. Okay. As far as diversification goes, there's over $8 trillion right now in IRAs, and that's as of 2018. The majority of those funds are invested in brokerage accounts. There's only about 4% that are invested in alternative investments. And as I mentioned before, the reason why there's only 4% that are invested in alternative investments is because people just don't know that it exists. They don't know that they have the ability to self-direct their money, because most people, they give their money to the financial advisor. The financial advisor just says, this is what we're going to do with it. And that's what they do with it. So that's why this, coming here and learning about this is a good investment and good opportunity for you guys to know that there's more out there than just the stock market. And especially now, the stock market's going crazy. A lot of things are going weird with the stock market right now. Being able to invest in alternative investments is a great time, especially right now.
Yeah, what I was going to say was I have some stocks as well too, and they're fluctuating greatly. But what happens when you have high inflation? If you own real estate, your properties go up and your rents go up. So it's always good to have some real estate in your portfolio.
Agreed. Like I wouldn't tell you, if I was your financial advisor, I wouldn't tell you to put 100% of your assets in real estate, but I wouldn't tell you to, put 100% of your assets in the stock market. Diversity is good, because when one stock goes up, another one goes down, you're not going to lose as much. And the same thing is true with real estate or other investments. If you invest in non-traditional investments, real estate typically fluctuates sometimes in opposite the stock market. But as you can see here are a lot of the choices that you can invest in. There's a lot of different investments. The most common, number one, trust deeds and mortgages are common. Rental properties, tax lien certificates, LLCs. What LLCs means, if you had like a private company, let's say a friend of yours says, I want to start a business, but I need some startup capital. Can you invest in my business? You can actually do that in your IRA account. You can invest in startup capital, startup investments. A lot of it, there's raw land, oil and gas. Are there any questions about what you can and cannot invest in an IRA? Perfect. One of the things that right there in the middle that you can see it's becoming more of a hot commodity is gold and silver. You can see it there in with the inflatable, whatever that's called, but the life raft. So you can invest in gold and silver in your IRA. Another thing that's becoming more popular is cryptocurrency. So Bitcoins, Ethereum, Bitcoin Cash, those are becoming more popular in an IRA account as well. So there you can see there's a lot of things in an IRA account that you're probably not doing in your current retirement account because your current custodian brokerage company does not allow that. All right. So what are the benefits of a self-directed IRA and a 401k? First, it increases your buyer's pool. So there's, I'm not sure who's all on this call and what your backgrounds are, but first and foremost, if you guys had a self-directed IRA and you wanted to invest in real estate, it allows you to do that. But if you guys are real estate agents or in that real estate market and you want to find people that can invest in real estate, it will increase your buyer's pool because a lot of people have a lot of money tied up in their IRA accounts and they don't know how to use it or don't know what to do with it. By having a self-directed IRA account, you now open the door for maybe people that would not have thought about buying real estate. Now they actually want to buy real estate because they can use their retirement account.
I'm going to ask a real quick question right now. So if a person had, I think how it would work in our market is they've got a small apartment building. They like to sell it, get something bigger, but it's hard to find something else. What's great about having properties in the custodian or occupant like this is that you don't have the 1031 time frames.
Oh yeah,
when you're
which
selling
is
and buying.
what, year?
No, it's 45 days and 180 days.
Oh.
There's no time frames here.
Oh, okay.
But you've got a person that got a great property, sort of a ton of money, right? Maybe it's down on the shore. It's a 3-unit building. It's worth $2 million, but they'd like to take their money out of state, but they don't know what to do, right? They could sell the property. They can also be a partner with themselves and bring their 401k in as well. So it would help them to be able to purchase another property as well.
That's correct. So you'll find some people that say they've got $1 million and they could go buy a property right now, but you'll find most people have $80,000 to $200,000 in their IRA, which for the most part, if you only got $100,000 to $200,000 in your IRA, you probably don't have enough to actually go buy a piece of property, especially in today's market. Market's $300,000 to $500,000 is probably your average home price. So if you only had $100,000 in your IRA, you can actually partner with your IRA or partner with other people. So let's just say that I see there's 4 or 5 people in this room right now. If all of you guys had $100,000 in your IRA and you found a property that was worth $400,000, each of you could pool your money together in your IRA account, set up an LLC that the IRAs invest in, and the LLC will purchase the property. Each of you will be an owner of that LLC. I think there's an example that we'll go through at the end of this, but it allows you to basically partner with your IRA or other people as well. That's one advantage, is it increases your buying pool. The second, it increases your buyer's client's purchasing power. And this we've already hit on this, is if you're a buyer or if you're working with a buyer, they now have a lot more money that they can invest in, because as I mentioned, if you look at your portfolio, most people don't have more than $3,000 to $5,000 in their personal bank account. They keep their bank account pretty low, but most people have a fairly large amount in their IRA account. I think the average is $80,000 in an IRA account. So you have more money in your IRA account than you do in your personal bank account. By using a self-directed IRA, you now have the ability to invest in more than just stocks and bonds, and you've got a lot more purchasing power. And the third benefit is it offers added value and services versus other realtors. So as I mentioned, if you're a realtor and you know about self-directed IRA accounts, you obviously are ahead of all the other realtors out there that are not familiar with this type of strategy. And you automatically have an advantage over them because you can start advertising to people that you never thought you would be able to buy property. All right, so let me kind of go through some of the things you cannot do in an IRA account. You cannot invest in collectibles and life insurance policies. So collectibles, as it says here, artworks, rugs, metals, stamps, coins, alcoholic beverages, basically anything that would be considered a collectible, you cannot invest in a self-directed IRA or any other IRA account. As the exception below, it says, if you're buying gold and silver and it's US minted or it's not a collectible, you can buy gold and silver. For example, you can buy a gold or silver Eagle coin, but you could not buy an 1800 rare Civil War coin or some coin that has some intrinsic value besides just the gold content itself. The third thing that you cannot do is you cannot invest with a disqualified person or do a prohibited transaction. So what could be deemed a prohibited transaction or a disqualified person is you or a spouse. So let's just say that you're married and your spouse has a piece of property. Your IRA could not buy that property from your spouse. Children and their spouses, grandchildren and their spouses are also disqualified. Same thing. If you wanted to buy a property and you wanted to rent it to your child, you could not rent it to your child because that person's disqualified. A fiduciary of an IRA or a corporation, partnership, or trust that you have at least 50% ownership in. So if, let's say that me and a friend own a partnership 50-50, my IRA cannot invest with that partner because we are on a 50-50 split. Does that make sense? Are there any questions on prohibited transactions? All right. The one things that are not exceptions is brothers and sisters are not prohibited. So let's just say that your brother is flipping houses and you wanted to invest with your brother's business. Your brother is not disqualified. So it's going to be up and down the food chain. It's parents, grandparents, children, grandchildren. All right. Don't mess with the IRS. So here are some things just to be aware of. The question is can your IRA lend you $10,000? So do you guys think your IRA can lend you $10,000?
I would think that.
So it cannot lend you, no deal, basically. It cannot lend you $10,000 because you are a disqualified person. What about your brother? Could it loan your brother $10,000?
Yes.
Yep, brothers are okay. What about your stepson?
Yes.
Yes.
So stepson is okay. What about your daughter-in-law? No deal. So that, just kind of think about that. If you start investing with related parties, just be aware that you need to make sure that you're doing it correctly. And that's why using a company like us, if you wanted to buy a property and you wanted to get more information about will this work or will this not work, you can call me up and you can explain your situation and I can say, yep, deal or no deal. It's going to work or it's not going to work. But just keep that in mind. There are some disqualified transactions. All right, so let's just go through real quickly a case study. John would like to purchase a rental condo for $150,000. He has $175,000 in his brokerage account and to send to AccuPlan to purchase his property. So he wants to buy it for $150,000 and he's got $175,000 in his account. John initiates a contract to purchase the property under his SEP IRA. So the one most common thing that I see people do is if they want to purchase a property in their retirement account, they purchase it in their own name first. They go, okay, I'm going to purchase it in my own name, and then I'm going to have my IRA buy it. You cannot do that. The IRA needs to buy it. So that means the purchase contract needs to be in the IRA's name. Right below step 1, it tells you how the titling should be. John Wood, legal owner via non-trust custodial IRA with AET. So make sure when you enter into a contract or one of your clients enters into a contract that they title everything correctly. The second thing is John completes a buy direction to purchase the property. And the third, AccuPlan sends the money of escrow money of $5,000 to the title company to coordinate the closing. Step 4, John reads and approves all the closing documents. AccuPlan wires the money from the SEP IRA into the title company, and then a warranty deed is recorded and sent to AccuPlan for the purchase of that property. Any questions related to how that would go? It's pretty straightforward. It's pretty simple. I mean, it's no different than any other contract that you would enter in. The only difference is the contract name is not the client's name, and the money is not coming from the client. It's coming from us, the custodian. And then you can see this is how the titling would work. It would be the buyer is John Wood, legal owner via non-trust custodial IRA with AET with our address. And then John decides to hire a property management company. So that property management company will then take care of the rest. How that works from the rental property, John locates a property management company to oversee the unit. The property management company finds a tenant to lease the unit. Rents and expenses are handled by the property manager. And then the condo has a positive cash flow of $500 tax deferred. So at the end of every month, the property manager sends $500 back to the client's IRA account. That $500 is tax deferred. You do not have to pay taxes on that money. Continuing on our case study, 2 years later, the tenant offers to purchase the property for.
Here's a question real quick.
Oh yeah, go for it. Yeah.
So it says John decides to hire a property manager. Does John have to hire a property manager to take care of these things, or can he do it himself?
He can do it himself.
Okay.
But now where you need to be a little cautious is John can be the property manager and he can manage it himself, but John cannot do any sweat equity on the property. What that means is, let's say the property needs to have a new roof put on it, and John is a roofer by trade. John could not use his roofing contracting business to do the roof himself, because he would be providing a benefit to his IRA account. So he would have to hire a company to do the roof. He could collect the rent, he could pay the expenses, he could find a tenant. Those three things are not a problem. If he starts doing a lot more, it could be argued that he is providing sweat equity, and that would be disqualified. So yes, he can, but don't basically be a property manager, and don't be a general contractor. Don't be the handyman for the company, for the property. Does that make sense?
Perfect. Yes. Thank you.
What I do is I use a property manager as an online portal, and the ability to pay rents back and forth. So all the expenses go to them. They pay all the expenses. Whatever's left gets put right into my LLC account. And there's really no question that I touched it or did anything with it.
Gotcha.
Yep. So yes, property managers are fine, but it's not a requirement. The client can be the property manager as long as they are being a passive property manager.
Gotcha.
So continuing on our case study, so he bought it for $150 2 years ago. Now he wants to sell the property because the tenant wants to purchase it for $225,000. They coordinate with AccuPlan for the closing of the title with a title company. On the day of closing, John reads and approves all the closing documents, and the proceeds after closing costs are all wired back into the SEP IRA. So in this case, I'll show you the how that works, the return. He bought it for $150,000. He got $12,000 of cash flow for the last 2 years, and he has $75,000 in gains on the property. Again, this is assuming no closing costs. So there could be some closing costs built in there, but by the end of the 2 years, he now has increased his $150,000 to $237,000, which gives him basically a 58% return over 2 years. So the advantages of a self-directed IRA account is the $75,000 gain, the $12,000 cash flow is all tax deferred. And was mentioned before, you don't need to do a 1031 exchange. So you could sell the property in 2 years. If you want to go buy a property, you can buy it at any time. You don't have to wait the 180 days and have it done right there. You could go back into the stock market, and then you could go get out of the stock market and go back into real estate. So the advantages are 100% of the income is tax deferred, and it does not require a 1031 exchange in order to buy another property.
Yeah, that was really helpful for me because I sold a property in California. And then when I tried to buy a property last January, it was so hard to get the properties where I was trying to buy them. Then I kept getting outbid. It took a long time, but I had no worries with the time frames. So I pulled all the pressure off.
Because it wasn't a 1031. Gotcha.
Yep. All right, I think we only have a couple more slides. So let's just kind of go through the last couple slides of setting up the account. In order to set up a self-directed IRA account, you have to have an IRA custodian that allows that. Again, AccuPlan Benefits does that. You have to complete an application and set up a new IRA account. We charge $50 to set it up, and we charge $350 annual. $350 is all that we charge. We do not charge, excuse me, we do not charge a percentage of how much money is invested. Basically, it's just a $350 charge. You then have to roll your money over from your old IRAs or old 401ks. You find the property that you want to purchase, and then you purchase it in the name of the IRA. These numbers actually are not completely correct. We kind of went through these. These are the type of IRAs that you could do: traditional Roth, SEP, simple individual 401ks. It's actually $6,000 into traditional and Roth, and under SEP, it's $59,000. Oh, so just keep that in mind. The numbers are a little higher. In summary, IRAs can hold all types of investments, not just securities. Partnerships and split ownerships are allowed. IRAs and individual 401k plans grow tax deferred or tax free, and all plans qualify and partial transfers are allowed. So all of those things you can do in a self-directed IRA account. And this is just my contact information here. But do you have any questions that I kind of went through that fast? Does you have any questions about what you can and cannot do, prohibited transactions, things like that?
So are the deals all cash then?
They do not need to be all cash. So let's just say in this example that this guy wanted to purchase $150,000, but let's just say that he only has $50,000 in his IRA account. He could take the $50,000 as a down payment, and then there are one of two ways that he can do it. One, he can have his IRA go get a loan. And we have companies that do IRA lending. So his IRA contacts one of these companies and says, I need to get a loan for $100,000. The IRA gets the loan, and the $150,000 goes to purchase the property. The IRA then is responsible to pay back that $100,000 loan. That's one way to do it. The second way to do it, as was mentioned before, is you can partner with your IRA. So let's just say I had $100,000 of cash and I had $50,000 of IRA money. I could purchase the property and it would be owned 1/3 by my IRA and 2/3 owned by me individually. So there would actually be two owners on title. Me, that because I owned $100,000, 2/3, I would be taxed with that 2/3. So 2/3 of the income would be taxed, but 1/3 of the income would be tax deferred. Does that make sense?
Yeah. I'm going to have you stand for a couple minutes while I go over this other stuff, just in case there's any questions.
No problem.
So what I have in the packet there, if you want to put the other packet up real quick, we'll start with where it says Jacksonville. Is that, let me get to that page.
Do you want me to do it or?
Yeah, please.
Okay, I can do that. Yep. So let me share my screen back again. Just 1 second. And
so to tell you what I did was I wanted to buy a property. I think it was 520,000, and that was a apartment building in LA, and a property for 168,000 in Boise, Idaho. At the time was not a good place to buy a property, really. But I didn't have enough in my IRAs, right? So I went and I got loans for both properties, and I have that information in the packet here. So up on the screen, you can see there's two lenders. One of them is called First Western Federal. You don't need to use these lenders. I just used them, and they were pretty easy. First Western Federal Savings is for almost all states. Okay. First Western Federal Savings are for almost all states. When you go in California, I like to use First Bank because the rates and terms are better. But when you're buying in other states, you need to be able to find someone that will do it in whatever state you want it. These aren't the only lenders. I'm just giving you some so you know what their programs are, how they work, how to call them, and then you would know kind of what kind of loans you'd be getting. But the one thing you need to know about it, it's a non-recourse loan, which means these loans don't show on your credit. So if you got this loan, it's in your IRA, you go to buy another property on your own just to live in, this does not show on your credit. And also, they can't foreclose on you personally. Nothing will show up on you in a foreclosure. They can take the property. There's no recourse against you. They can take the property, okay? The other wrinkle that you have when you get a loan is it requires more tax filings. You have to do a filing for that as well too. There'll be an extra tax filing.
You LLC this, right? Is
right,
that right?
Right. I'm gonna have Ben talk real quick about the LLC. So I saw you had a scenario there where the person bought and they used AccuPlan as the person to pay the checks, pay the bills, send the money to escrow. What I did is I created an LLC specifically for my IRA. And so you want to tell them how that works? Because I have the checkbook control.
Yep. So let me grab the, see if I have that. Oh, let me silence my phone. Just 1 second. Someone wants to talk to me. Okay. Let me go back into the PowerPoint and let me show you just 1 second. All right. So let's go back to that case study here. Here we go. So client wants to, step one, where it says client wants to initiate a contract to purchase a condo under a SEP IRA. I could actually change this under his LLC. So I'm LLC. So in this case, it would say Ben Barker LLC is what I'm going to call this LLC. So in this case, instead of the IRA buying the property and it's saying John Wood, legal owner here, it's going to say Ben Barker LLC. So what will happen is an LLC will get created. The money gets transferred to our company, and then the money goes into Ben Barker LLC. And then I'm the manager of Ben Barker LLC. So as manager, I make the contract in the name of the LLC. So it's basically just removing this step right here and replacing it with Ben Barker's LLC. And then I think, let me go back down one more.
Good idea to find a person that does the specific types of LLCs.
And we do, Accuplan, our company does IRA LLCs as well.
Okay, good. I didn't know that. That's kind of new, right? A couple years.
Yeah. So we've been doing them as long as I've been here. I don't know if, you previously were working with, they kind of mentioned that, but we do these specific IRA LLCs for clients. We do them in all 50 states. So if you wanted us to set up an IRA LLC, we could do that. No problem.
What's good about that is if you had it in an LLC, that means you have control of the funds.
Yep.
So I'm going to be closing on a little vacation home that we're going to Airbnb, very small. And when I close, I can just wire the money from the LLC account directly to the closing agent. If you have it under an individual with that, then you need to contact Ben. Say, Ben, I want to fund this. You're going to fill out a form to fund it. Then he's going to send a check, which is a little bit different, right?
Yep.
One is not better than the other. It depends on your situation and what you want to do. I think one's more convenient, but then you have to pay for the LLC. You have to pay for the annual dues of the LLC. You get taxed on. There's all kinds of things that go on with that.
Yeah.
So you just have to think about what you want to do. I just wanted control over it, and so I did it that way.
So I this is another slide I've used before. Here's kind of gives you the way that works. So you set up an account, step 1. You fund the account, step 2. You select the investment, step 3. ICO stands for IRA company. That's what we call these IRA LLCs. So your investment is actually going to be in the LLC, and then the LLC purchases the property. So step 3 is select the LLC, and then 4, the LLC purchases the property. So Does that make sense?
Yeah. Can you put up those 2 lenders real quick just so people can see those if they didn't see them? Just scroll down a couple pages.
Yeah. I can scroll down here. And
you guys want to just see who those lenders are real quick?
Yeah. Okay.
They're
here we go.
So there's go a little farther. There's a show First Bank on there somewhere.
Yeah, let me make it a little small. Okay. So we've got First Bank right here. Yeah. First Bank Unique Program. And then
you just, if you want to find them online, just type in First Bank Non-Recourse Loans.
Yep.
They'll come up. Okay. The other one is a little farther down. And like I said, they have First Bank has great rates. It was a really, really good programs there. They were California only. So when I went out of state, I used First Western Federal Bank. The rates are always about 1% higher. They're adjustables. They're not as good, but you know, just like when you buy anything, you figure out what your risk tolerance is and you get the kind of loan that you want to get and for your return. So I just wanted to show you guys those 2 things. First Western Federal Savings Bank. Okay, see how it says IRA non-recourse lender? That's important. Now make sure when you purchase a property, you have to, let's say you're buying something. If you're not the realtor, if you're buying something from a house or someone's representing you in another state, you have to make sure they title it right the first time. It's got to be your name, right? Every single time I bought a property, I've had to correct them 4 or 5 times. Escrow, title, realtor. I'm not buying the property. This person's buying the property. You have to put it in like this. They may, when you're buying, they don't usually require a copy of that LLC. The lender will require it. When you sell, they're required. So you do have to have it available as well to send to the entities that want it. Do you guys require a copy of that as well?
No, we don't. If they do the LLC, then we don't need a copy of the escrow or anything. The LLC is doing all that. If the IRA is purchasing the property and the IRA is getting a loan, sometimes we need to see a copy of the loan. I don't know if we even need to see it, but it's always good to see it just in case.
Right. Okay. Then if you want to go over to where it says Jacksonville,
is that the very
website with you guys?
Oh,
it's
okay.
called Berkadia.
Do you want me to go there?
Yeah. Oh, okay. Go to the website. Yeah, you go to the website Berkadia.
How do you spell it?
Berkadia. It's a K. Yeah, you got it.
Okay. Berkadia. Okay.
Yep. So you come into Berkadia here. I think it's owned by what's the guy's name that owns it's a real estate company. No. There was the guy that was the big millionaire. What was the guy? I'm trying to think of what his name is. Famous millionaire guy in the stock market.
Not Warren Buffett.
Warren Buffett?
Yeah, Warren Buffett.
Okay.
What real estate office does he owns? He owns something. But this one here, if you go to Berkadia, you go to, let's see, I don't know if it's properties or research. Go to research, right? And you can't type in Long Beach, but you can type in Los Angeles.
I think he had Berkshire Hathaway.
Yeah, Berkshire Hathaway. That's who he owns. Yeah. Did it pop up?
And what says research and records filtered by California, no research for Long Beach.
Let's put Los Angeles in, or San Diego, or Bakersfield. It has to be a large city.
Oh, okay. Yep.
So here you can pull up all the information on it. This is a good way to get an overview of what's going on in there. How many units they need, how many new homes are being built, how much the properties are going up in value, all that kind of stuff. It's really, really good to look at. Then there was just a random email. Oh, you can keep going through it if you want.
Okay. Yeah. Just
some of these are more for people that want to do construction, but you want to look at just the overall market, what's happening in that market, right? Are the rents going up? Are the rents going down? Vacancy levels, all that stuff's in there. Then what you can do is you start contacting a realtor over there. So this is a local realtor. It's one of my friends who just sent it to me. But once you decide, hey, this area might work for my investments, then you're going to have to find some in that area that's not already working in, right? That make sense? You find because it could be out of state, may not be here, or it could be in California, but somewhere else. Just depends on what you want to do.
Sure.
And then when you do that, then you'll start getting information from the realtors. Now, one thing I did was I bought these in COVID, so I didn't go. You should go. I didn't go to my property in Idaho. I should have went to that one too. So I think that what happens, I have found when you buy an estate is sometimes your first property manager is not the one you keep forever. Sometimes you end up with the second one, but you got to just know that first year can be a little rocky sometimes, the repairs and things. So if you're okay with it, you have to kind of have that expectation. But once I work through the bugs out with them, how they work, how I work, that stuff like that. I suggest going to the properties first yourself and seeing the area.
Sure.
The other thing that I do, just my piece of advice, and I got this from the first person I bought them from in Idaho, is there was a lot of temptation to buy properties that were $50,000, $30,000, real cheap properties, right? But he kept trying to tell me you want to buy at about 150, 160 at the time, right? Because you want a nice, normal neighborhood, not normal, but you want a nice neighborhood where there's pride of ownership, schools are good, that you want to kind of look for that kind of stuff because you're not there. And so you don't want to have the hassle of getting tenants in and out and repairs and all those kind of things when you're not there. And if you go to lower priced properties, you end up with a little bit more of that. Now, if you're an apartment purchaser and you buy apartment buildings, it's a whole different thing. But if you're an agent buying single family homes, a person like me, buying single family homes for retirement purposes, that's kind of where I would go to. I just a little bit lower than the medium. I wouldn't go for the highest price, right? So now what we're gonna do is we're gonna once I realize I got my IRA set up, I got my LLC set up. I start make sure I got my you do the neighborhood research, find out where you're gonna buy, how much money you need, do I need a loan or not, right? Yep. Then I'm gonna do some research and I'm gonna say, okay, what is my return gonna be? What return do I want to have? Now, these have been really, really good for me over the last couple of years. But if you want to go to just some of the numbers I have in Alabama, and I bought these last January.
Alabama.
These ones right here?
Yeah, Huntsville, Alabama. These are just some samples of properties that I purchased.
Let me just make it so you can see it better. Just rotating it. Okay.
That's good. Now you're going to scroll up to where the little spreadsheet sheets are. You see those?
Is it like, okay, not these?
This looks like numbers. Yeah, right here.
Okay.
Okay, so here's some of the properties that I purchased. Now, I wanted to buy a certain amount of properties. So the way that I set up my thought process is I need to replace the income that I was getting from the LA property out of these properties. Okay, the problem with the LA property was I was having a lot of, there was crime and there was stuff going on. And the market here with the landlord laws here are kind of tough. So I wanted to kind of move my assets away from the landlord laws, okay? So here what I did is I bought a property that, and this particular property was about $208,000. I also try to-
In Huntsville.
Huntsville, Alabama.
Okay.
I also try to purchase properties that aren't super, super old. These are all about 10 or 12 years old when I bought them, okay? Then you can see the rent, you can see the annual numbers and the monthly numbers and the income. So the income for the year on that one is $15,000, well, $16,000. And the rents have been going up over the last year for sure, okay? So, and then, but that's kind of how I live. But why I like that area was the taxes are very low there. There's a lot of things to keep in mind. You go to Texas, property taxes are really high. Oregon, property. So you got to think about where you're purchasing. That's why you want to look at this kind of stuff.
In Texas, they're kind of high?
Yeah.
Oh, I didn't realize that.
Here's
Okay.
you look at the area you want to find the growth and prices and stuff. But then you also have to, you have to think about what your costs are going to be. And different areas have different customs. What's great about this area is the renters pay everything. They pay.
Oh.
They don't pay HOA. They don't pay property tax, and they don't pay. Triple net? Yeah, no, not quite. And they don't pay the. They don't pay your property manager. But they pay water, electric, gas, and gardening. Their own gardening, right? And water and everything. They pay for it all. So the return here is really, really good. That's one of the reasons I want to go to that area. Plus, it's a booming area. So it doesn't have to be where you guys want to go. You go all over the place. I've got friends in Jacksonville that are doing well. And I've got people in this area that have done well too. But there's a lot of good growth areas. A lot of people have gone to Arizona, different areas like that. This is just a sample of what it was. So what I did is I got 3 of these. And if you look at them all, they're all about 15,000. Maybe you can show us the next one. 13,000. That one went up because the people moved out and the rents went up.
Oh, wow.
The lady said, "Oh, they just moved in. I feel so bad they're moving out." I said, "What's the rent?" She told me it went up a couple $100. I said, "Great, let's get a new renter." So that was good. This one here is about $14,980. See that too? So I'm getting $4,200 a month net from these properties.
And these are all single family homes.
Those are single family homes. You can invest in any kind of property you want. That's kind of what I was looking for.
What happens if your IRA account doesn't have the cash to pay the expenses? If you're limited on what you can put in your IRA, how does that work?
Well, for instance, you should have you don't have a cap on what you can do unless you have a loan. The only time they tell you how much you have to keep as a reserve is if you're getting a loan, you have to have 50%. You have to have like 15% of your loan amount. So basically you need about 50% down, even when you're getting a loan. So if you're going to buy a property for 100,000 and you had 50 in your IRA and you got a loan for 50, you couldn't get it. You would need another 15,000 as reserves because you can't just add money when you want, right?
Right.
You can only add the 59,000 or whatever your income allows, or the 6,000. Is that right, Ben?
Yes. And then if let's just say that for whatever reason that reserve was gone or you don't have it, you can always contribute to your IRA account. So as you saw before, you can contribute $6,000 a year. So it come January, let's just say that, you had something very unforeseen happen. You got to have some new carpet put in and it's going to cost $5,000. If you did a $6,000 contribution to your IRA account, then you would be able to pay that. Or if you don't use all your retirement account, let's just say that you've got $100,000 in your IRA, but you only move $50,000 to us and you keep $50,000 back in the stock market. You can always transfer more money over to us later if you needed to.
Right. What he's saying is if you had 100,000 in the stock market, but you only rolled out 50 to them, you still had some other, you could roll that over there as well too. Right. The other thing that happens too is, remember, if I'm getting $1,243 a month going to my account, it's going back into the account.
Oh, back into the IRA.
Right.
Gotcha.
And it stays in there until you're 59 and a half when you start taking distributions. Okay. Was that a pretty good understanding of everything there?
Yes.
Good. All right. Well, thanks a lot for your time today, Ben.
Sorry, I muted. Thank you guys it was really good to meet you guys and to talk about this.
Ben's contact information. I didn't have it on that little sheet that you sent me, but
Here, I can put it down here. Let me put it in an email real quick. So let me just show you Here's my contact information right here. Ben Barker. My email address is ben@accuplan.net. My phone number is 801-683-9291. So here's.
Is it okay if I shoot you an email to this and then you email back with all that?
You bet. Yep.
Then I have it on your signature line.
Yep. Ben@accuplan.net. And then let me just show this to you. If you want to set up an account, it's very quick. Here is Accuplan's website. On the far right, it says account. You click on create account. And then all you need to know, we need to know your basic personal information, account security, identification, payment source, terms and conditions review. It will take you about 5 minutes to create an account. It's pretty quick. But let me go back and you can see there's my contact information there. So yeah, email me if you have any questions. I can email you back my contact information as well. And then again, if you want to go forward, I'll help you through the whole process and get you all set up. If this is something that you wanted to use for your existing clients, if you have clients that are interested, again, I'm happy to work through you, or I'm happy to work through the client directly, whatever is easier for you.
You know what I found out was, and you're going to find this out if it's going to be for yourself, maybe now that you've seen the presentation. I didn't have anybody presentation to me. I had to call and ask all these questions one by one. So it took me a while it took about a year to get comfortable with it. Your clients will have a long learning curve with this. So you're going to have to let them season through it, right? And I think the best thing to do is to go through the presentation with them a little bit, have them call Ben if they have questions, or you can get questions done, but also to show them scenarios of what money they're going to make and how it's going to work, what the loans are going to be. But just keep in mind, people don't, it takes a normal person who's not in real estate, not a big investor, not a big risk taker. A lot of people only have their money in 401k are not big risk takers, right? It takes them a while to get through the process with, this isn't really risky. I'm just buying real estate versus buying stocks. And
It's
then,
the
and
least risky.
well, it could be.
Kind
Just,
of.
it depends on the people, but just be prepared. It takes time for, there's a little seasoning, I think. Do you think that's right, Ben?
Yeah, I would definitely agree. I mean, they may have bought property in their own name, but very few people have bought property in their IRA account. So they may not completely understand what they can and cannot do. They may not understand, oh, I need to make the contract in this name, or I need the money sent to the IRA account. The money can't go to me. So a lot of those things, obviously, we're there to help and assisting to make sure they do it correctly.
All right. Well, thank you guys for your time today. Appreciate it.
Thank you.
And if you guys have anything else, let Ben or myself know.
All right.
Thanks, Ben.
Thank you so
Thanks,
much.
everyone. Thank you.
You guys like that?
That's fascinating. No, really
Yeah,
good.
really
Good. I'm going to pick a couple packages here for some people.
Yeah.
Can I have another one of your cards, Doug?
Absolutely.
No, good stuff.
You're welcome. You do the investments on the back.
Yes.
Yes.
Commercial, yeah.
I do commercial too. And
you
I
do?
bought, yeah, I do quite a few commercial. I do a lot of apartment industrial mostly. But a lot of our guys that are commercial brokers, they use us to buy it because they all do SEP IRAs.
Right.
Because
Yeah.
when they have the brokerage, they do the profit sharing. At the end of the year, they break up the money in their SEP IRA,
Oh,
and then they
okay.
buy property together. They love it.
Wow. Yeah, I like it. Thanks.
Welcome. You got one?
Yes.
Okay.
Yeah.
I was gonna. Yeah, I was gonna give one to. Two. Good. Thanks.
All right. Just want to go safely rest back there. Yeah, let's go real quick.
Yeah, I got my whole retirement since I started in 2011.
Okay.
And I have like 13,000 a month coming in.
And you have the property too. So
Right.
I mean, that's amazing. That's great.
Yeah.
No, all my 401ks, like I've got a couple from a different couple companies, and it's about whether you're investing in long-term or short-term sort of thing. It's nothing, like if you're being more aggressive or, that type of thing.
Well, I have both, right?
Right.
So, but mostly what I do is I know that I can't invest as much as I can spend. Plus, I can't invest as much as I got to spend plus inflation.
Right.
So if you had $1 million in account last year, right now, if you start $1 million, you wouldn't. You'd have like 800,000 because inflation eating up.
Right. Right.
Properties don't. When inflation happens, they go up.
Right.
So you want to make sure you get at least one property.
Sounds,
That's hard. I mean, well, property ownership is, generational wealth. It's everything in this country. So that's so smart. I actually have never heard of this before.
I know.
Yeah, separate IRA.
So it's a
yeah.
great
So
idea.
I worked for a company that went out of business, got bought by another company, so I rolled my money out. So when I did that, I'm like, where am I with this money? and I don't know, stocks. And the people I talking to, I was impressed.
Yeah.
Or it was like so much detail. I'm like, I can't read all that or whatever, So I thought, well, I'll try to do this. I saw this guy do class, and that's kind of how it happened.
No, that's
Yeah,
great.
I like that so much better, to
And
be
plus that
honest.
is good for customers, for us people going and be like, what are you doing with your money?
Right. Right. And even if they don't do it, it gives you something to talk with them about.
Right, right.
So you're helping them.
Yes. Well, thank you so much. That was great.
Yeah, thank you.
You're welcome. Okay, well, did you have one of the company you worked with before? You still have, but you don't work for those companies anymore, right? Okay, so now it's an IRA, self-directed IRA. If you work for the companies, it's 401k. If you created your own business, you create your own 401k for your own business. But you probably just have these little IRAs around, right? Okay, so all those you could put them all together by real estate. So if you have 20 and 40, 60, 80, put them all together, you can buy property that down for 200,000. But the rents go up with inflation and the value goes up with inflation. So that's good. But call Ben. Yeah, they'll explain that to you better than I can. All right. Do you when you get done, if you do this, beautiful. Yeah, that part you're good there.